If you want to retire early, you need to be financially independent. But how much money do you need to reach financial independence? Well, one answer to that question is your financial independence number. In this video, I'm going to show you how you can calculate yours. Welcome to Money with Markus, where I help you reach financial independence by earning more, saving more, and investing more money. My name is Markus and I am myself currently halfway to financial independence. In this video, I'm going to explain the concept of the financial independence number, or FI number for sure. I'm going to show you a few examples of what that FI number may mean in practice, and I'm going to also highlight some limitations of using the FI number in your planning. Stick around to the end of the video where I'm going to share a bonus tip that's going to encourage you on your journey towards becoming financially independent. There's links to everything I'm talking about in the description below. There you can also pick up my financial independence planning spreadsheet for free. As a reminder, financial independence means that you have enough income from your investments to cover your expenses. And the example I'm going to use in this video is income from your stock portfolio. A well-diversified stock portfolio should be able to generate a sustainable income of 4% per year. This income comes in two forms: dividends and capital appreciation. Dividends is when the company pays out a part of the profit of the company to the shareholders, which is you if you own them in your stock portfolio. The other type of income is that you can sell some of your shares once they increase in value. Now, why is it 4% exactly? Well, based on historical stock market data, 4% is a good conservative estimate for how much income you can generate from your stock portfolio. I have a separate video about that, about the 4% rule, and I have a link in the description below. But for this video, let's assume that the 4% is a long-run sustainable income from your stock market portfolio. We're just getting started with these tips, but if you already got value, please hit the like button. So with that 4% income, let's say that you have $1 million invested in your portfolio. That should be able to generate $40,000 each year for as long as you have the portfolio. Now, could you live off of $40,000 a year? If yes, then $1 million is enough for you to be financially independent. And if no, then that $1 million portfolio is not enough for your particular set of circumstances to be considered financially independent. Now let's use that 4% rule to calculate your financial independence number. Remember that financial independence is all about being able to cover your expenses with the income from your investments. So your expenses are an incredibly important component in determining your level of financial independence. And the way we're going to make this calculation is that we're going to take your expenses, divide it by 4%, and that's going to give you your FI number. If we take the example that we looked at before, you had $40,000 in expenses. If you divide that by 4%, you will end up with $1 million. And in this case, $1 million is your FI number. Dividing something by 4% or dividing something by 0.04 is the same as multiplying it by 25. And we can use the same calculation here. If your expenses are $40,000, you multiply that by 25 and you will end up with $1 million. So in both cases, $1 million is your FI number. Now let's flesh out this example a little bit more. The first thing you need to note is that the expenses that you're going to use in your calculation should be your future expenses at the time when your portfolio is going to support you, whether you're working at that point or not. And depending on your circumstances, those expenses may be higher or lower than your current expenses. But always keep in mind to have your future expenses for your planning, really for anything to do with financial independence and retiring early. But let's assume that your expenses are a lot lower. Let's assume that they're only $20,000. Well, then you get your FI number once again by multiplying it by 25. So if your expenses are $20,000, then your FI number is 25 times 20,000, which is $500,000. And if your expenses are a lot higher, let's say that they're $80,000 per year, then your FI number is once again $80,000 multiplied by 25, which in this case is actually $2 million. So the one thing I want to get across here is that your expenses, and particularly your future expenses, is the most important driver when we look at calculating your financial independence number and how much you really need to be able to retire. Hit the like button if you got value. Now let's look at some limitations of using your phi number as the basis for your calculation. The phi number has to do with the market value of a stock portfolio, but you could have many other types of assets that generate income. Let's say that you own some real estate that generates rental income to you. What the value of that real estate portfolio is in a given year doesn't actually matter, because the most important thing is the income that that asset generates. It's the same thing if you have some land with lumber on it or oil. It's the income that that asset generates that is important, not what you could theoretically sell your piece of land for. Another example is your pension, especially if it is a defined benefit pension. It's going to pay you a given amount, really regardless of whatever the value of that pension fund or that pension asset is. So remember that it's the income from these assets that is key to determining your level of financial independence, not really the market value of the asset itself. And this is true even for the stock market, especially when we look at dividends. Dividends are not paid out as a percentage of the share price. Dividends are actually paid out as a fixed amount determined each year. So the important is the amount that you will receive, not the value of the underlying shares. If you want to learn more about dividend income investing specifically, I have a different video about that. Have a look at the links in the description below or click the card here above me. In just a moment, I'm going to jump over to my bonus tip, but if you got some value from this video, please consider subscribing to my channel for more tips on how you can reach financial freedom. And here's the bonus tip. As you start your journey towards financial independence, one of the first things you're going to learn to do is to cut your expenses and save more money. And as you start doing that, reaching that phi number is actually going to be a lot easier. Because it is related to your expenses, and when you cut those expenses, the phi number that you calculate now will probably be lower the next time you actually calculate it. At the same time, you're saving more, so reaching it will become more easy. And that means that you have this positive reinforcement from both sides. And I think that's really going to encourage your journey towards financial independence. Now that you know your phi number, you're probably wondering, how long is it going to take me to reach financial independence? Well, the answer to that question is a surprisingly simple number. It's your savings rate. To watch my video about savings rate, click the video on the screen now. Also, remember to grab my free financial independence planning spreadsheet from the link below. Thank you for watching. I will see you in the next video.